Today's guest is David McDonough, the founder and CEO of CommonStock. CommonStock has raised close to $50 million, and they provide a social investment platform designed specifically to amplify the knowledge of the best investors with the goal of improving the world's financial health. We talked about how market patterns emulate naturally occurring systems in nature. We talked about the traps and operational guidance ideas in operating companies in boom and bust cycles, and what David and the team at CommonStock did, specifically being in this incredibly sharp boom and bust cycle in crypto to set themselves up for long-term success. We talked about the evolutionary path of fintech companies, from brokerages who charge per transaction to Robinhood, who makes it free to trade, but then bulks the trades behind the scenes. We dissected that business model to understand exactly how Robinhood works and project how the future of trading might look. This is a long and very engaging and dynamic conversation that I very much enjoyed, and I hope you do as well. Here is David McDonough. All right, David, thanks for copping on today. I'm excited to chat with you. I love what you're building at CommonStock.
Likewise, it's great to be here. Thanks for having me on.
Yeah, I really enjoyed kind of our pre-show conversation about bonding over East Coast living. Just to kick it off, maybe CommonStock, let's talk about that. So you were at Google for 6 years or so, and then built this company straight out of there. Was there a particular experience, or had this been a growing interest of yours to have a community-based experience of investing, or how you articulate the vision of CommonStock?
Yeah, the genesis was basically my own story. You know, I grew up in DC, didn't know finance, went to school in Connecticut with a lot of friends whose parents and family were in finance. And after graduating, I graduated in 2008 into the financial crisis. And so it's interesting to see us sort of going through something similar potentially right now. And it really forged who I was. And I realized I need to learn markets and finance. So I started building websites, doing web design, learning how to code. And in 2008, 2009, while doing that, realized I also wanted to learn about markets and economics, started an investment club, and because it would be fun to learn with my friends who had just graduated. And that was really the genesis, right? Back then, I YOLO'd about $100 into Citibank at $1 per share, just dumb luck right at the bottom. I was like, oh, this investing thing is so easy. You just buy cheap stocks and they go up. I think it 10x'd in a few months just because I bought the bottom and I made $1,000, and I was like, oh, this is the richest I've ever been. This is crazy. I learned immediately about making money while you sleep and the difference between equity and, ownership and labor. And so that was the spark. And I, being an internet native person, knew that the way to learn was to basically I was in the subreddit forums, Value Investors Club and FinTwit and Twitter, learning from other people, smart people. And I just wanted a way to amplify people for my own knowledge, amplify people who knew what they were talking about. And that was where the idea became something real. I started building this hacky side project while I was at Google that would let people link their brokerage account and put their money where their mouth is and use the data to show the people who you should learn from. That went, mini viral around Google. This was 2015, 2016. And I left Google because I realized there was a huge opportunity in retail's expansion, and left in 2017 to build it full time. And here we are. It is, as you articulated, think of it just like a social network or a community built on top of brokerages and crypto exchanges, where you can see what people are thinking, get their analysis and their insights, and then see if they have skin in the game, see if they're actually outperforming the market, see what they buy and sell, what they own, and whether or not to, all of that creates this community of trust and transparency and quality, which is, I think, is something that is deeply lacking in social media in general, because the incentives are a little bit perverted right now for attention versus quality. It's a whole nother topic that I'm sure we can dive into, but that's what I want CommonStock to be, is a social network that amplifies smart quality content.
And it seems that the integration to the brokerage accounts and having the integrity of the data is a key part of the difference between something like CommonStock and stock twits. Is that the right name of it?
Yep. Yeah, exactly. And that was one of the things that made this possible, because I've had this idea for a decade, but the APIs, this is why actually crypto I think is really interesting, because it's the first asset class that is fully digitally native, of course. But you have to remember, when I started CommonStock and started building this thing, Robinhood was just launching. This was 2015. And the existing brokerages like E-Trade, Fidelity, TD, right? I started with E-Trade, where I had to mail a physical piece of paper and a written check with like wet signatures and wait 5 days. And so there was no way to connect your E-Trade account without screen scraping to another third-party platform. And so this wasn't possible until we built the APIs that, plug in to let you in a secure way, in an accurate way, link Robinhood, E-Trade, Fidelity, and crypto platforms are even easier because they're, of course, digitally native. And so now adding Coinbase and FTX.
And who started that? Like, was it one of the brokerages just kind of opened up the API? I mean, not open API, but had an authorized API like Fidelity or E-Trade, and then that kind of sparked creativity. And was that around the time of like Mint.com when he? Because when I think about this, that's the company I think of who kind of pioneered the banking API.
Yeah, so Mint was like one of the original. I remember having a Mint account when I was 22, getting angry emails. It was just like, hey, you spent 95% of your money on bars and restaurants this week. Hey, thanks, Mint. I'm aware. It's not responsible. I'm poor.
Yeah.
Shut up.
Poor young.
So Mint was the original. And then actually Plaid was part of what gave me this idea. And this is interesting in hindsight. I was talking to Zach, the Plaid founder, back in, must have been 2014, when they were 2 or 3 people in an AngelList profile. And I had a call with him. He was walking me through the banking APIs. And I was like, wow, this is really powerful. But banking is kind of boring to me. I just don't care about banking. That was a dumb perspective in hindsight. But they were doing that for Venmo, for example. And I was like, whoa, if Plaid can do something like this and link banks to Venmo to send money, that's what made the banks realize, like, holy shit, this is a really powerful thing. If we can play nicely with other third parties, we can embed ourselves and get way more transactions, way more customers more rapidly. That was one of the aha moments that made me realize, oh, if Plaid could do this for banks, maybe we could do this for brokerages. And so I started investigating it. And Robinhood was one of the first. And it definitely took a lot of time, just like with Plaid and Venmo. It took a lot of time because people are naturally pretty suspect about the idea, Fidelity and E-Trade, but they're all finally coming along to realize like embedded finance is the future, and that open versus walled garden helps them become way more powerful, entrenched businesses.
So were you one of the first developers to build on those APIs, or were you that early to help shape those APIs or push the dev teams to kind of customize what they were building?
Yeah, I think so. I remember I have the emails with the Robinhood founders and the early Robinhood team. And it's funny how naive certainly I was. Probably they were at that point too, back in 2014, 2015, just meeting up in Mountain View and showing them my hacky little designs. I'm like, hey, would love to get access to your API. Here's what I'm trying to build. I'm just a huge fan of Robinhood. They, of course, the original idea for Robinhood was something like CommonStock. And, part of it had community. And so they were excited about it. We share one of our first VC was their first VC. And so it was very, small ball the company was tiny back then. CommonStock was one person, and Robinhood was probably 20 or something. So it is funny to look back, and it was like, yeah, sure, here you go. Help us learn what we should build, how we should do this. There's no real paperwork or anything. And then when they started growing, Fidelity, all the legacy brokerages realized, oh, this is something we need to be involved with.
Yeah, yeah. You said they initially started off with the ambition to build a community. Did they drop that entirely? I can't remember if they do that anymore.
So they never did it, and they never actually rolled it out. It was more of, the very original vision, I think, for the founders was something a little bit more social. And what they realized very early on was, again, this is 2011, 2012, and we were still paying $9 to $14 per trade. And they realized that there was a huge, revenue opportunity and business opportunity in, building consumer social is difficult for its own reasons. And, being a brokerage is also very difficult. And there's pros and cons to both. But I think they realized that the path to building a consumer business that was more viable at that point and certainly more profitable was being the brokerage that could undercut and kind of revolutionize brokerages, which they were correct on, given that point in time. And then they forced the hand of every legacy broker.
Yeah, yeah. It seems like they saw the trajectory of decreased cost per transaction and said, well, it's just going to be zero eventually, which in and of itself is kind of an impressive realization. But then you have to come up with a business model to sustain yourself. And, you can get some traction by just being a great design mobile experience. But if you still were to charge $7 per transaction, it's just not nearly as compelling. And underneath the hood, my understanding is they have a secondary trading brokerage that aggregates the trades together and makes a marginal revenue off the difference in the trades between. Can you articulate this in a way that makes more sense? Conceptually, I think I understand it, but
no, it's deceptively simple, but it is, and this is what GameStop really proved to me, being now on the other end and being able to see, how the system works. There's no boogeyman. But there's so much. Nobody understands the boring architecture of the markets, and so it's very easy. This was the first time I realized how easy it is for misinformation to kind of run rampant. It's been kind of wild to watch, payment for order flow and the conspiracy theories about Citadel and controversies, when it's all actually really, and this is kind of wild to see people say, and there's more transparency is always good, but to see retail and beginner investors say that it's paying a fraction of a penny per trade, they'd rather go back to paying $9 per trade. It's just kind of confusing. But the way to back up that it all works is, let's say I want to buy, one share of Tesla. I can, historically, I might go to a brokerage and say, Interactive Brokers, I would like to buy one share of Tesla at this price. They would send that to the New York, well, I guess not New York Stock Exchange. Yeah, NYSE. And that order, that buy order would go up against hedge funds that are trading in large blocks that are buying like 50 million, 100 million of shares at a time versus my one. And what that means is that when that hedge fund buys, 1 million shares, they're going to take every price from like the $1,000 price to 970, or like there's this massive chunk of share prices that they're going to wipe out of the market. And then when I go to buy, sorry, not 1,970, 1,000 to 1,050, right? They're going to keep paying higher until there's no more shares left. They've filled their quota. Then I, as the retail person, get a worse price, right? I'm stuck at like 1,051. And this is vastly oversimplified. Yeah. But I'm basically competing with the large orders of the open market. and also paying what's called a rebate. So I have to pay a fee to Interactive Brokers. They might get something called a rebate that the exchange pays them. What Robinhood did was, if there are enough of you and me trading, of retail, small, odd lot orders, instead of going to the open exchange, they'll just match them up, right? If I'm trying to buy a share of Tesla and you're trying to sell a share of Tesla, there's enough of that happening that they can use data and say, Mike's selling, Dave is buying. They can swap it together, and they'll use what's called an internalizer or warehouser. That's Citadel, Virtue, or Two Sigma, the market makers that will facilitate that trade. And an exchange, this is where it's this very rare kind of win-win-win scenario where Virtue or the market, or Citadel, the market maker, can facilitate that trade. They can take the spread, which is if you're buying at 1,001, if you're selling at 1,001, and I want to buy at 1,000, right? They'll meet in the middle, and they'll take 10 cents on that trade. They'll give Robinhood 2 cents on that trade, and you and I both get to do that trade for free, basically. And with enough of that volume, it's just trading, retail's trading back and forth. There's no, everyone gets the best price, the same price as the open market, to the best possible price. Best execution is the legally required regulation. And it basically just reduces instead of you and I having to compete with each other in the open market, there's a place dedicated to retail. Now, there's a lot more efficiency. There's settlement periods and collateral where it can take 3 days for that actual share to change hands, which is when Robinhood needs collateral for all of that, which is where it gets complicated. And that's what's changing from T+3 to T+2, I think, recently. But, at a high level, they're just connecting, instead of you and me going to the grand Turkish bazaar where every single person is buying and selling, we go to a corner store and trade with each other, where it's easier to go one-to-one, and we aren't competing with massive wholesalers.
So does it? Yeah, no, that was good explanation. Does the NYSE lose out in that sense because you're not in their square doing the trade? Yeah.
So in theory, then this is the part where it gets a little bit tinfoil hat-esque, where the New York Stock Exchange, the NASDAQ, they're the ones who lose a lot of that trading volume. Again, the volume is so big, and retail now is roughly 30%, but back then was 5%. And so still the vast majority of volume is on the open exchange. But there's definitely an incentive for the NYSE and NASDAQ and any other exchange to want all the trades to be routed through them. And that's where this incentive can be interesting, let's say, where if you are a hedge fund or an institution, you don't want those trades going back and forth between retail, because then you don't really get to see the odd lots or participate in them as much, take advantage of them, trade against retail for XYZ reasons.
Does it have to flow? Is there one canonical source of stock transactions that NYSE would have, or is there if you and I did trade a Tesla stock on Robinhood, does Citadel maintain the ledger on that to say, okay, David now owns this, where Mike did previously, so we have a recorded transaction? How would Tesla, if you chase the ownership of the stock all the way back to the company, Tesla gets informed by who that different people own the stock? I would think it would be NYSE.
No, so there's a Depository Trust Clearing, DTCC, that basically clears every single transaction where you are, and this is a speed bump basically to make sure that no defaults can ripple through the system, really. But the Depository Trust and Clearing Corporation, it basically settles every trade. And so that's where that would be the canonical source of these things of who owns, because when you buy, in most cases, right, when you buy a share of Tesla, that is like you have the rights to vote, for example, in a proxy vote, and that is important to know who the end owner of this equity is. It gets complicated because there can be trades that happen off exchange, dark pools. Those trades will go to what we call the tape, right? They'll be printed on the tape. That's every trade that happens on the NYSE. So that's one canonical source. And the criticism frequently of this format, which is valid, is that these dark pools or off exchange transactions in a internalizer, there's just not as much daylight. There's not as much transparency into, is everybody getting the right price? Is everybody, the DTCC will tell you, what's been settled and who owns what, but won't give, I don't think, every detail of every transaction. Like the bid, the ask spread, and the timing, et cetera. So that's where it does get a little confusing. And this is all part of the somewhat perverse incentive where it's all kind of murky, and it's murky because there are large incumbent institutional players making insane amounts of money because it's murky, right? If it's all open and transparent and everybody can take advantage of it, it's a commodity, then that's good for most regular people, but it's not necessarily as good for the banks and the people who have access to a Bloomberg terminal to capture a lot more value.
Interesting. Do you feel it's moving that direction, moving towards more transparency with a steady cadence, or is it kind of log jams in this murky water?
It's moving that direction for sure. I think it's going to be bumpy and fraught with log jams. And I think it's mostly because of it all. I think human nature is what makes it difficult. And I think largely humans and society weren't really prepared in general for the internet. And I think it's just a fascinating social experiment where not just in finance, but in politics. And I think that's what I think GameStop was fascinating. Crypto is going through the same thing, I think, right now, where the internet creates such a fascinating dynamic of attention aggregating to a smaller subset of things that, go through this mania hype cycle, because all of the attention is focused on GameStop or Bitcoin or Ethereum or, crypto punks or, Democrats versus Republicans, QAnon or, Antifa. Like it's whatever side you're on, the way that the internet is currently designed, it's about attention on one thing. And because we're bombarded with so much. And so that's where something like payment for order flow being evil can actually take hold, because there's maybe some nugget of truth somewhere there, even though there's room for improvement, but it's not evil at all. And so as we evolve and we get more transparency, it just takes time. And we go through these hype cycles of retail participation in stocks and then retail participation in crypto. And then we'll go into a crypto winter where it might be healthy because we can have some time to build and without all the attention and like the frothiness. And I don't know, I'm kind of, this is like, I'm rambling because this is what I think we're learning in real time, that this is how progress happens now, and these jumps and starts of, these hype cycles, for better or worse. It would be great if it was a more smooth, clean trajectory, but I don't know if that's
no, I'm with you. I find this fascinating because it's almost like a transparent view as to the process of like evolution, really. I mean, there's no difference between what we're collective, like you're building a slice, like a tiny slice of the internet. Everyone is building at most a tiny slice. And so no one is driving this thing. It's kind of like an amalgamation of all of our efforts, all trying to do what's best for us individually, but also there's like a game theory involved when if you do what's best for you, that doesn't mean you're greedy. It doesn't, because then you're playing a long-term game over the course of, you're trying to sell this customer, you're trying to build this company, you're trying to build multiple companies, you're trying to help other people around you. So I view it as kind of parallel to the process of evolution, where you'd have an animal that is trying to survive, or a species of animals that's trying to survive, and they'll make a jump. They might move to a new part of the forest, and there's not as much sunlight over in this part, so the food density is lower, and there's not as much water, so they have to acclimate to that. And it's kind of it's a flowing thing, and then new features of this bird are developed to acclimate to the new environment, and it's like a stream that's just flowing. And I kind of view it as a stream that's flowing. Specifically, the ups and downs to me feel like the feedback from the system. So it's like, yeah, we have kind of this innate process of positive and negative feedback. It's like no individual did anything massively fraudulent to create the down spike in crypto. And even if they did, it would happen regardless of that. And it's kind of like a function of people getting over and over optimistic about the timeline. I think a lot of it is like based on time and the impact that time has on your investment decisions. If you think crypto is going to be huge in the next 3 years, well, you might go a lot more aggressive into the investments. And I also think there's kind of this is the part that I find most fascinating, with the psychological blindness, where you can be incredibly educated, and you see this across institutional investors that are putting money into startup companies or public equities, where they know that these things are way overpriced, but the pressure of not investing is higher than investing. And so it's like, well, we can die in the vine today, or we can deploy this capital, and at least we're not unique. At least we go down with the ship. And I find that, like, it's the investors that can make decisions against the grain. Like in the movie The Big Short is fascinating, because you see this happen in real life, where there's a few investment groups that either got wind or discovered of this macroeconomic real estate bubble that was going on, and made the decisions to short the markets and benefited from it, and how that all plays out. So I find those people and the way that they think about investing to be fascinating. Because on the upswing, you're just competing with everyone else with who's picking the fastest horse when everyone's racing faster and faster. But it's, yeah.
Oh man, you just poked a lot of different bears. So first of all, love your analogy. And I want to just add to it, because I use this very frequently, your analogy of, evolution and an ecosystem and a river. I think of it like the carrying capacity. This is something that is not unique to humans. It's literally every ecosystem in history, as far back as evolution goes, where some animal will evolve some new super beneficial trait and find a new part of a forest or river, and will like reproduce like wildfire because they're so survivable and so powerful. And then they will go way above the carrying capacity of the ecosystem, and it'll become overpopulated, and there will be like a mass culling of that group, that animal, or there's like a forest fire that wipes out the underbrush and is a healthy part of building trees even taller. And there's like these patterns. I get like goosebumps because these patterns emerge in like the forest, in a river, in crypto, in stocks, in politics, right? You see it in politics where it goes, swings, this pendulum swings back and forth. And that's just exactly where we are. And I think humans, because of our relative short time of existence on the lifespan, it's so hard for us to think in these long super cycles of carrying capacity in an ecosystem. But if you are able to do that and be, contrarian, and it's unbelievably hard. It's like, even though like you could be the smartest people in the world, you and I both intellectually know it, but when you're in that moment, like trying to make that decision, the Michael Burry decision, or the same thing, this is the segue into the other thing that I think is the most fascinating, watching all these professional investors know these valuations are crazy. They're terribly unhealthy, and this is like the most obvious bubble ever. And it's still so hard to not get swept up in these trends. And that's, part of it is the trends are more apparent because of social media. It's easier to get swept up in them. I can talk ad nauseum about, I actually kind of hated the past 2 years and we were a beneficiary of it for sure. But it doesn't, everybody can win when you have unlimited money and just spend money on ads to grow, but that growth isn't real. You've raised VC money multiple times and have had a bunch of successful exits. So this better than everybody, that raising money at a super high valuation is awesome for like 2 seconds. And then you're like, holy shit, I got to 3 to 5x this to get more money. And if you have a valuation you don't deserve, that's going to make it even harder. And so that's where a lot of companies are now. And that's where we're in the forest fire phase of the cycle, which is healthy. It's going to weed out a lot of the less disciplined investors, the less disciplined startups. And I love our VCs. Like I love our cap table. They're very disciplined investors. But you can see the delta, and I can't imagine how painful it must have been the last 2 years if you are a Sequoia or a Benchmark, right? And you're watching Tiger and Coatue and everybody else like seemingly win every deal at high valuations. And I don't have any inside knowledge here, but I imagine now they're saying, well, actually we are pretty stable because we didn't pay up and we don't have a lot of markdowns. So I don't know, but that's where I think it's like the smartest people on the planet, even them, because everybody is interested in, rightfully so, their own survival. That creates the macro ecosystem pump that precedes the inevitable dump. There's no boogeyman, there's no bad guy. It's just, that's like the nature of an ecosystem, whether it's VCs, whether it's a river or woods. And I just think it's fascinating.
Yeah, I'm interested in and this is where I feel that the apprehension for being a contrarian derives from, which is sometimes you can be a contrarian or think a thing's going to go a certain way and you're wrong. It's like, what would be an example of this? I think of the .com bubble. Like so many people like to use the stories of the .com as something that's just going to play out again in crypto. And you can take elements of the .com rise and overvaluations and crashes, and you could dissect what went into those decisions and where the money came from and where it went. And you could apply a lot of that same lens and perspective to crypto. There is different mental models at play in trying to evaluate what to do about that situation and how to evaluate where we are today. And, people would say Amazon's just not a good investment in 2008 or 2004 or right after the .com boom, that this is just an internet company. And I try to map that on to some understanding about the world that fits into a bigger narrative that makes sense going forward. If you think crypto is easy to see the big picture, like, certainly there's an advantage to the currency of Bitcoin and the ability for Bitcoin to supersede fiat currency. Like the attributes of Bitcoin are much more compelling in so many ways. Then there's also like guns and the military and the ability for the government to just ban exchanges. And that just completely, on some level, there's just risk associated with how far away that decision is. The more clear the government is on the rule set and regulation, the less risk there is around it. But it is not inevitable. Things I would think would be absolute certainties sometimes surprise me. I'm like, yeah. And so I think that must give people a sense of like uneasiness, or maybe they don't trust themselves, is something that I hear a lot from people who are investing either their own money or other people's money, where they're like, I know kind of the rules. I know the thesis, antithesis, synthesis, dialectic of how things move in the world and how you describe the feedback loop from populations. And that happens in valuations. But then there's like, but I don't know. There's the risk of the unknown. And I don't know. I don't know what to make of that. That's where I am.
I mean, I think this is funny because there are two things that I want to touch on. There's one on crypto, which I want to set aside and get to that because I want to start with just a tactical explanation of my own experience of the past 2 years where, things are going well. CommonStock is very early when COVID starts, but we just released a beta. GameStop happens, retail explodes. We're seeing this, phenomenal growth, and we're growing 100% month over month at the beginning. Part of me is a little terrified because I'm like, this doesn't feel sustainable. I'm watching Clubhouse. I'm watching the hype cycle of all these other social networks. Crypto has similar problems where tokens almost compress the entire life cycle of a company into like this really rapid mania pump and dump. And meanwhile, investors, our team, there's 10 different copycats of CommonStock that emerge immediately after GameStop. Luckily we started building it in 2017. So we were the first and the earliest, and we were at the right place at the right time. But this was immediately now obvious, social network for investing. And so literally like every day for a month, there was like another identical copycat. And I would sit and watch a lot of them. Some of them would even raise money. One went to YC, like raise money on the tail of our excitement. And it's so excruciating to be like, we are not going to get sucked into fighting with these other terrible copycats that are just buying users. They were spending $10 to, in some cases, $1,000 of CAC per user, lighting money on fire to grow. And they were flooding their community with low quality users and no thought about sustained, the strength and the foundation of an actual community of people. I joked a lot with our team that you can pay any number of people to enter a room together. You can't pay any amount of money to get them to stay in that room for very long. Mm-hmm. The only way you get them to stay in that room is if you get them to meet other fun people and actually, internally, inherently want to stay. So we spent about 2 years building, watching these other companies. In some cases, they would leapfrog us in terms of signups. Investors would get mad at me. The team would get mad at me. I call it the David gets punched in the face phase. Mm-hmm. It was like borderline rock bottom because everybody was mad at me for not sprinting to keep pace with all these other copycats that were just lighting money on fire.
What would be like a decision? What are you deciding to not do or do?
It was like, hey, we haven't started some of our marketing yet. Let's just start spending $100K a month on ads just like throw money and we'll sign up 10,000, 20,000 users a month. Like really easily we can just throw money at the problem. Mm-hmm. Or let's hire, the team was 8 people, I think. Let's 5X the team. We need to get to 50 people and move much faster. And those are good examples where you move faster in the short term, but in the long term, you slow yourself down because you can't scale a team, especially not at that stage that quickly. It causes all of these other, soft problems. People aren't code. I joke when it was easy when I was writing the code and doing the design because the code wouldn't yell at me when I fucked up. And rightfully, the people aren't so happy when I screw up and don't manage them well or something. And you're dealing with people at the end of the day. Same thing with ads, right? Sarah Tavel at Benchmark gave me some of the best advice ever, probably saved CommonStock unintentionally. Wow. Because we were talking before the Series A and I was watching these other companies leapfrog us in terms of attention, buzz and marketing and user signups. And I was like, Sarah, can I just spend $1 million of ads and get back ahead of these people? And she was like, please, whatever you do, stay out of your own way and don't do that because you have the most powerful thing on the planet in a naturally forming community. And those bonds are stronger than anything on the planet. And the second you flood that community with a bunch of random strangers, that community is is screwed, right? If you go to a nightclub with your friends or a bar with your friends and a cruise ship pulls up, you're not going to stay in that bar. You're going to be like, all right, fuck it, I'm out of here. And so she talked me off the ledge. And what's happening now is all those companies are bankrupt, shuttered, or are in their last gasp of a pivot because they spent all their money. They didn't learn the hard lessons about how to build retention and sustained engagement and real community network effects. They optimized for, the buzzy top line monthly active user growth that feels good, but is actually not real in often cases. And we aren't immune. And everybody's mad at me. And this is like a year long where I'm just like, did I get it wrong? Should I be playing this game? I feel like it was gut wrenching for like a year and a half until recently, literally the past 3 months, all of those companies went bankrupt and we now have 30% month-to-month growth, insane 50% retention, and are on fire. And that's the compounding, like the counter-cyclical. Turns out that strategy was directionally correct. Again, when I say not immune, we did start experimenting with some ads recently. And what we found was there's a lot of, VPNs from all over the world that are not ideal users from India and Asia. Not that there's anything wrong with those users, but we don't support their brokerages. And they would enter and not only make our metrics haywire because they wouldn't retain, but they would, make the community feel like it was getting spammed. Like our spam went up tenfold, which alienates the power users. And so this is a long way of saying basically that gut-wrenching conviction of you can't rush like the growth of a tree, right? You have to do things, I think long-term, do things the right scalable way. And I think we're getting back to that now. And I think that's what it's a big part of what I hope crypto takes away from this. And there's so many quick money seekers, get rich quickly, rent seeker type people in crypto that give the entire thing. Crypto is, for better or worse, I think for worse, represented by the worst 5%. Same thing for politics, same thing for anything. The most vocal, most illegitimate 5% give the rest a really bad name. And I think in crypto, especially because money is attached, we all need to have, and it's impossible to do, this much longer term horizon, longer term view of we are building in crypto for the 10 to 20 year outlook. And that's how I approached CommonStock was we can blitz scale our way to growth in the next year and buy a bunch of users. We better fucking get acquired or we are screwed. And that's like the go big or go home. If you don't get that acquisition, you're high and dry and the tide goes out. Where the more sustainable thing that I think builds value in the long term is steady, continual growth that is sustainable and then compounds. Like I think of the best companies in the world today are the ones that spent years, almost a decade, building the compounding effects, like Figma, right? Not an overnight success. Figma was 7 years of hunkering down and building and getting things right. And then that's when the real compounding takes effect. And that's what crypto, I think, needs to be okay with, not try to hype everything up and understand these projects. It takes so long to build anything of value, as you know, if that's where the double-edged sword of crypto is, it's super valuable and I'm super excited about it. I'm very bullish on crypto and Web3 and everything along with it. But the general public needs to understand the time it takes to build something. It's like 5+ years. And, when I started CommonStock, I joked with one of our teammates today, literally, I was like, this is great. I'm going to spend 6 months, build a social network, and Robinhood will buy us for $100 million, and I'll retire. Legitimately, that was what I actually thought was going to happen. Here we are 5+ years later. I still think of our product as a beta, and I still don't think we've launched, even though of course we have. And you just don't realize until you've done it how long it takes to build something of real value. And I think crypto is great because it's ushered in all of these new participants into a new financial system. Unquestionably great in the long term, but be ready for the gut-wrenching long-term outlook. That's almost the contrarian view, and optimizing for that versus short-term day trading swings.
Yeah, so true. I mean, it's human nature, right? We certainly aren't motivated to take as long as possible to build as little value as possible. And the slot machine promise of like overnight successes or, gambling and winning the lottery, it's like, it's the same part of our brain. It has to be that's triggered by sex and sugar, where it's like, oh, we're hyper stimulated to like climb the social hierarchy overnight and put in very little work to get a huge output. I think that the great sort of deception that is like a contrarian view is that's, you'll hear this when you hear two people who have won the lottery, one who just blows it all on whatever, they spend it all day one, and one who, it's if you win the lottery, you're just as much happy, if not more miserable, in like a year or 2 years than it would be if you hadn't. So I think this whole idea of, even in business, like you say, when we're successful, this one day when you've accumulated either enough attention or money or progress in the world, that's a certain checkpoint. I think it's kind of a deception. I mean, I see this kind of play out in the political sphere when people talk about wealth inequality and distribution. Like, you'll hear that and you say, well, of course, you want to be wealthy and you want to pass that on to your children, and consolidation of wealth is a point of political agitation. And there's some truth to that. But then there's also the story of like rags to riches and back in 3 generations, where if you gave all this money to your kids, they're probably not going to feel any challenge in life, any adventure. They're probably going to blow it, mismanage it, and their kid's going to be poor again. And so I kind of just view it as like a beautiful journey on whatever story you're on. And if you want to take that train and just raise a ton of money and spend it as quick as possible, and like, that's a hell of a thrill. It's not a gut-wrenching, disciplined approach. It's like an adventure and a stressful experience. But I don't know, maybe some people just need that. Like, there has to be those people who they put pressure on markets to, I mean, if you look at it from like a quantitative economic standpoint, they're putting the pressure on markets to optimize pricing. Like if you didn't have all these fleeting retail crypto investors, I don't know. It's hard to say good or bad. Go back and forth.
Think this is just the most. No, I love this because I think about this constantly. And I think about what you just said. It's like this deception. I like that term. It's just the greatest deception of all time, that I'll just be happy if I just hit this milestone, right? And like the long term, the big mental unlock for me, the biggest ever, was we're all just playing a roughly, for me, this is what got me through the harder, stressful times, is this almost out of body experience of watching a movie of like, oh, this is a pretty good movie. This is a wild adventure. We're in like the very hard part, or after the Series A, we're in like the euphoric great news part, but there's going to be surely another challenge that comes along. And it's about the journey and the meaning of life and learning and the relationships you meet along the way. And everybody has a different scoreboard. And for me, my scoreboard is the amount of impact that I get to have on the world. That's what I get excited and driven by. And I had a very comfortable childhood. I feel very privileged. The best way I can describe it is I went to a private college that I didn't have to pay for because my dad worked in education, but I don't have a trust fund or anything. And I went to school with a lot of kids from prep schools, what I would say kind of wealth adjacent. And my job and my life is unquestionably harder, right? They had tons of money, were able to just buy a house right out of college. Seems so much easier. But a lot of those friends are kind of having, midlife crises, they're not fulfilled. They don't have a lot of meaning because they didn't have like a purpose because they were just handed, a house and a Mercedes after college and didn't have to hunt around and search for what they wanted to have purpose for and like drive towards. I work nonstop and have a much more difficult, in theory, on the surface, life than them, but I love it. It's insanely fulfilling. It's so much fun. And yeah, there are definitely hard and stressful times, but I wouldn't trade it for the world. And that probably sounds crazy, but I wish, another example of this is I really want a dog. Every step of the way in fundraising, I was like, if I ever raise $1 million, which I doubt I'll ever do, I'll get a golden retriever. And then raised our pre-seed. And I was like, okay, 5 million. And then, okay, now it's too crazy, 10 million. Okay, wait, maybe 20 million. Surely when I've raised $20 million, I'll just be like on a hammock somewhere. Here we are having raised like 50 million and I've got a mega desk set up like that I travel around with me because I want to keep working. Still haven't gotten a dog.
You haven't gotten the dog.
Not yet. Planning on it soon.
100 million.
But that's like this deception where you always think that the next step of money is going to make everything easier. It just makes the problems bigger, right? And I wish this sounds ludicrous. I wish everybody could, our startup CommonStock is doing well. By no means would I consider myself this like big wealthy success, but I wish people could experience some level of wealth and realize, even if it's paper or even if it's temporary, oh, this literally changes nothing. Actually, it's all about the relationships, and it makes things a little bit more comfortable. Like now we have more money in the bank as a company, so I can, I feel like we're flying at a higher elevation plane, but we're still frantically trying to build the plane. So we just have more flexibility if things start crashing. But that's about it. There's still the same problems. There's more problems. There's more people. So anyways, this is my roundabout rambly way of agreeing with you. I wish people could somehow realize that, there's a lot of hardship and I wish people could, you need a minimum, but inequality isn't going to be this panacea that solves everything. It's like, we need to think about how people can make connections with other people, because that's ultimately what makes people fulfilled and happy. And if you're just handed a bunch of money, I don't know why I was thinking about this today, but to our pre-show discussion about like the suburbs, if you were given the nicest, most fancy house you could have ever imagined, like everything, your dream house, but it was on an island, the most remote island in the middle of the Pacific, you would sit in your like gargantuan mansion on this island and be like, fuck, this is so stupid.
Yeah.
Like I don't have anybody to share it with. I have the biggest TV in history and it's just me. This sucks. Give me like a hut in the middle of a city where my friends are.
Yeah. Well, I was thinking when you said earlier about the idea that if people are given a bunch of wealth from the start, they're given the house. I think my theory on this is that most people are effectively asleep throughout most of their life. And they tell themselves that they're this individual person with these challenges and personality types and sensations. And they're very convinced that they're separate from everything else going on. And there's a perspective change that occurs either organically in life. It just happens. It could be on a psychedelic experience, could be through meditation, could be a number of different ways. But the perspective shift is to see this as a collective game. Like it's easy to see as just an individual, like single player game. Then there's also this, I think, almost feedback from the universe where why does someone feel guilty if they inherited all this wealth and didn't have to do any work? You'd almost think like that's the ideal life, right? I want people feeding me grapes and putting fans on me and naked women everywhere. And I think the reason for that is there's a there's an intuitive injustice that's happening. You're not contributing into the pool that is the thing that matters. Whereas, like you say, the thing that matters to you the most is having the biggest impact. What are you impacting? What are you pressuring into or like molding? It's like this whole thing of everything that we're making. And I think there's a realization that we all benefit from progressing this thing and that we don't really have a choice. Like you can't just not participate in the evolution of society. Otherwise, it just deteriorates. And the deterioration, like you can't say exactly what will make someone feel useful, meaningful, purposeful in their life, but you can certainly say what will make them miserable and in pain. And I think that that's the game. Like that's what's fun about it. And that I transcribe that into business where you just, pick a lane, build something, and then ride it to the next thing. And it ends up shaping this collective thing. And I find markets particularly interesting for this reason in looking at what the patterns of what we're building are, because markets really can be so transparent and they can be so clear. Like I can see CommonStock, I can see Google and Facebook and what they're building. Whereas if it's, an ideology or a group affiliation that just believes something, it's more amalgamous. And yeah, that's kind of how I triangulate why I'm so interested in markets. And a lot of people I think are the same way with that, but they won't quite know why they're interested in it, or they might think it's for money or something.
Yeah.
Yeah.
No, I like your framing of it's a game that everybody's playing no matter whether you like it or not. And we're all playing it together. Right. And that's that's part of this great big game. I think of markets, right, when I started as a game where it's a game that everybody can play and everybody in theory has equal information, and it's who can predict the future the best. Mm-hmm. And that's the part, like, I actually don't even care as much about the money. What I find more fun is the academic ability to try to predict what's going to happen and see the future 5 or 10 years. And in theory, same thing with companies. Like it's just this open playing field that everybody globally gets to participate in. And I think, to your point, everybody has some people just do want to get rich, right? Just like the bigger game of life, some people just want to have a family, mm-hmm. or just want to do the most partying or whatever it is. There's nothing right or wrong about any different thing, I think. But you do know these are the things that will make you fulfilled or make people fulfilled. These are the things that will deceive you into thinking you'll be fulfilled, but you'll be really unhappy and you won't be contributing, which is interesting.
Do you view CommonStock's like distinct mission as incorporating this idea of like an investor sophistication development? I mean, certainly the idea of seeing other people's portfolios, seeing their trading strategies, it's a more like tactical way of evaluating someone's, strategies. But then there's also like everything what we've been talking about, which is the Hegelian dialectic of how things are, the reaction from the market. They're more, they're like mental models. I would think of someone like Ray Dalio and his books with the evolution of empires and how money works as being almost like a story on top of a story, or like a meta story of what's going on. Do people on CommonStock go there? Does what I'm saying make sense? Or is it like, I could imagine you have like classes on there or the people who are teaching these more higher level ideas and how they fit together. Cause it does seem like there's so much knowledge that's already been discovered and written down, but people haven't, have I read Adam Smith like in the last 5 years? No. Should I possibly? And how many people like him have thought about these ideas before with like Hayek and just debates on economics? I don't know. But it seems like there should be a platform that reincarnates some of the great economic thinkers and puts it in a format that people can digest and make investment decisions on.
Yeah, and that all makes total sense because that's a lot of that. And this is going to sound, I'm sure, probably sounds like I took some psychedelics before we recorded this. But because I think about things on this very high level, very long term arc, where CommonStock, the mission is to improve people's financial health by making it easier to access quality financial knowledge and insights. And if we're successful, what that means, I think about it kind of like a Wealth of Nations-esque, to bring more people into the wealth class. And this sounds idealistic, I'm sure, and cliche, but I think we're on a somewhat untenable increase of inequality, where a lot of that information you just talked about, and I've been the beneficiary of this for sure, is siloed in certain groups that have access to certain schools, and it's harder to find, it's hard to get access to. And that's why I think crypto is a fascinating, even more accelerated version of distributing knowledge and making something decentralized. But I think of CommonStock as a place to teach, very specific tactical decision-making and insights and strategies for markets. But my hope is that, alongside that, or some of the higher level, this is exactly what happened with me. This is my literal journey. Alongside that are learning economics, how capitalism works, the pros and cons of different structures, what restraints are needed, how to distribute wealth properly for a functioning society, and make that fun, engaging. There are memes, there are jokes. It doesn't need to be a textbook. I think that's the problem. Right. Because I'm just I'm a Joe Schmo everyman in a lot of ways. And I learned all of this because I was working in the service industry to save money for med school. And I was YOLOing in stocks with my friends in 2009 and just bullshitting with each other about should we buy Palm Pilot or Apple? Apple's going to crush Palm Pilot. If you have a stylus, you're trash. These are the kind of jokes that we were talking about when we were learning about actual tactical decisions.
Were you the founder? Are you the founder of Wall Street Bets?
I am not. And it's changed a lot, but our investment club was Team America Recession Police, or TARP, which should give you a good picture of how dumb we were at the time. We would go into bars in New York, again, 22, no idea how the world works. It just graduated, pretending we were day traders with our E-Trade credit cards. But I loved that so much that I then started taking micro and macroeconomics classes at night for free. Back then, the U.S. Department of Agriculture, where this is so fascinating. This is how to learn how the world works. I started reading all of these books, Capital in the 21st Century, that just are so fascinating to me. And that's how I think about CommonStock, is this 10 to 20 to 40 year vision of, if we do our job over the long haul, we will have ushered in a new class of investor who understand how to invest and trade and understand markets, but also economics and markets. And I think of GameStop and Wall Street Bets, for as shocking and caustic as the content is, and as terrible in some cases, you can't deny that it also brought in a bunch of teenagers knowing who the chairman of the Fed is. Mm-hmm. And that's kind of crazy that there are a bunch of 18-year-olds talking about quantitative easing and economic policy. Yeah. That's not a thing that would have ever happened before. And imagine those teenagers, they have gone through GameStop. They've now, because crypto is this in a lot of ways, is the speed running of financial history. They've gone through a contagious market collapse of crypto probably. And by the time they're 25 to 30, they will have seen the entire history of finance and been burned by it. Yeah. They've become millionaires. They've gone broke. And now they're ready to start a family and hopefully have the scars, the healthy scars to prove it and be sensible. And I think that long timeline, if CommonStock does its job, is there to help create a more, harness that energy for more engaged and informed decisions. And in over 20, 30 years, create a more informed, population in terms of markets and finance.
It's super interesting. It's almost like what I was thinking about is you have crypto, which represents the new financial landscape. And then you have the old financial landscape, which is Wall Street. And there's incredible knowledge built up and obviously wealth and sophisticated investment criteria and all these things. And then you have a bunch of people who have $500 or less, maybe that the government gave them out in stimulus checks, and they want to participate in this new landscape. Well, crypto is going to always attract, I should say it more specifically, the newest financial landscape is going to attract the youngest and most unsophisticated investors. It's not going to be the other way around. Like your first investor into Bitcoin is not going to be Fidelity, venture fund. It's going to be like the guy who knows nothing about anything and hears about Bitcoin and puts in $20. And I think that's going to be true consistently, where whatever's new in the financial world in terms of opportunity to invest is going to be done by people who have the least, who risk who can take on risk, but not in a way that costs them much. It's like monopoly money. If you have $50 as a kid and that's your entire life savings, like if you lost it, it wouldn't be that big of a deal anyways. It's not like you're providing your family on this. So I almost think of what this is just mirroring what you're talking about. CommonStock could cement itself in crypto specifically. And it could say, we're the most sophisticated place to learn about crypto, in addition to, and taking maybe the lessons and the ideas from how to invest in equities and what's been around for a long, long time. It seems to me that there would be two distinct audiences there. People who have experience investing in equities over time and those who don't at all. Like they don't have a brokerage account. They don't know what a brokerage account is. They just own a Coinbase account and move it in. But I think it's like there might be a place that all the young people consistently go. See, this is what I don't know. Like if you look at Facebook to Instagram to TikTok to Snapchat to Clubhouse, they're all kind of like the young people got on and then time went on. And then the young people got on the next car and then time went on. And that seems to be the trend with social, like Twitter to some difference maybe, but even Twitter skews kind of older, I think. So I think there's this inherent like generational capture you get with the social media platform, and it's tough to get the next generation to jump on. So there tends to be this long-term like 10-year cycle on social that I don't know exactly what to do about that, but it seems to be the pattern that's playing out. I love that you just brought this up. This is like an intractable problem. And I would say once a month I read an essay that I recommend everybody reads frequently, something called Status Seeking Monkeys by Eugene Wei. And he covers a lot of this about how any network is the combination of social capital and utility. And, I think I've thought about this in building CommonStock so much. When I look at Facebook, Facebook's a great example, or any social network. You're 100% right. They follow the same pattern where it's the new hip thing. The youths get on it. They did when I was in college in 2004. Facebook was the hottest, coolest thing on the planet. Eventually, this is the same thing as the ecosystem conversation we were having before. It grows so large that your parents are now on it. Yeah.
And you don't really want to be at a party where your parents are. And so you're like, all right, well, the parents are here. We're going to take off and head over to Snapchat. Same thing happens in Snapchat.
100%.
And then you move to TikTok. The same thing happens in fashion, right? Fashion has gotten it really correct where they actually build seasons into their style because they know in a genius way that the fashion of this summer has a shelf life. And by the end of this summer, the parents will start wearing it. And like, if you show up to like dinner and your parents are wearing like your Gen Z flannel thing, I don't know what Gen Z's wear. That's pathetic. But like, you're like, oh shoot, my parents are now wearing clothes I thought were cool. I got to find something new. So social and CommonStock, specifically, one of the challenges with this is I actually was joking today, but I think I might do it. In the onboarding, when you select your experience, I think we might try having a Dunning-Kruger chart where if you're a beginner, you kind of have to acknowledge that you think you know what you're talking about, but you have no fucking clue. And it's only through time, when you realize how complex these systems are, that you go through this trough of not really thinking you don't know anything. But then after a while, you start to realize you're learning more about the, public markets, equities, or crypto. And the challenge with us specifically is the people with the most time and the people who are most engaged, who usually want to participate, are younger. They're the most confident. The biggest challenge that we have in actually building a community is, and this happened to us, all of these young people started creating content, like flooding the feed with their analyses and their insights. And it was like, this is incredible. This is working so well. And what happened, this unintended consequence, was it became briefly a community for only beginners who were 22 to 24, who have no fucking clue how like long-term investing works, because they've been doing it for 6 months. There's nothing wrong with that. Like, you love that confidence. But CommonStock was built, and the reason for the API structure, the broker agnostic structure, was because I want to attract the supply side of knowledge, the people who have been doing this for 10 years, 20 years. They're not going to move their money to a brand new brokerage. So we need to make it as easy as possible for them to join the community and sign up. And the magic for me in an enduring community or network is, the supply side or the experience, or, the broadcasters, the creators, meeting the consumers, the new entrants, the younger people. And you need a healthy balance, because if you go all in on, like, TikTok has overcome this, but for a while, we all probably thought it was like for 18-year-olds dancing, and they've pushed through that, and it's more valuable. There's more interesting content, more educational content now. The average age is above 30, which is interesting. But maybe now I'm just the parent boomer who's joining, and the kids are like, oh, God damn it. David and his boomer friends are on TikTok. It's ruined. Let's get out of here and go to the next thing. Like, be real. I don't know.
I do think you're slightly insulated from that, because you're not selling the value proposition of, these social media companies are effectively replicating digitally the naturally occurring social hierarchy that we have in high school. Like, oh, Alexis is she's cool. Everyone establishes like she's cool. And then there's like Jake, and we like, this is what human beings do. It's like a cliche at this point. And I think TikTok and Instagram and et cetera, they quantify and they make it transparent where people are, for better or for worse. It's just like a social hierarchy on steroids, because it's so powerful and ever present. And there's definitely problems with that, but people are coming to those places, I think, largely to see what's cool, like what styles are cool, what memes are cool. Like, they're trying to get up with what are we valuing socially as a community. Whereas I think you're offering distinctly different value prop, which is, you have money. What are you going to do with it? You want it to go up? Come here, learn more about that. I think of it more in comparison to a college, where there's a social component to school, but really it's foundationally built on, we're all here for this common purpose explicitly, to get better at this skill, or get better at this, in the case of your CommonStock, investing the money that we have saved up. So I think you are. It does feel, honestly, that you're insulated from that kind of cyclical social thing. Because once the parents come on, people definitely want to leave. But once parents come on CommonStock, I'm like, great, my uncle is a great investor. Like, let me learn from him. That would be great. That'd be a great thing.
That's the dream. Like, that's what I hope. And it's, just to be clear, it's still really hard, but that is by design how I've thought about this, is to make it something that is enduring and sustainable. And that's where it's cool, actually, if your parents join, because you can learn from them, because it's something that doesn't go out of style. CommonStock, hopefully there's a different version of cool. It's not how well you can dance, has nothing to do with what you look like, color of your skin. It is, and I think Twitter is a really interesting proxy that you bring up. Reddit too, possibly, where Twitter is interesting to me, as you said, because it kind of lives in its own world, where it's struggling as a business, but it's the most foundational, valuable part of society in a lot of ways. It's like a weird niche. And I want us to, it still should be fun like college, but we are explicitly here to learn and improve and nerd out over economics and business and make more money and understand like crypto and equities, right? And that's actually another interesting challenge where it's a balance of we're building a lot of crypto features and, leading into Web 2.5. How do you do that in a way that doesn't alienate the stocks only people while also welcoming the crypto people? And so you want to build a bigger tent, a bigger college, more diverse people, where what's cool in our network, I hope, is being ridiculously smart and outperforming the market and kind of fighting capitalism with capitalism to make it work for, semi-pro, regular people, more advanced investors. I think that's really fun. These are people who didn't have, the fast track to Wall Street and are taking a circuitous route like I did, like a lot of our community, through effort and passion and intellectual curiosity to create their own path that I think is just more interesting and fun.
Yeah.
I
can't underestimate fun, for sure. What about, have you read anything particularly influential? You mentioned status-seeking monkeys. Any people that have been influential or books that come to mind as things that have sort of shaped your understanding or journey that you want to throw out there?
Yeah, and just to clarify, it's I think the tweet is the essay is actually status as a service.
Got it.
I'll send it to you. But so just to clarify, I think my favorite recent book, let's see, I just read, I guess this is topical, Netflix's book, No Rules, somewhat controversial, is one of the most relevant that I've seen, because in the world where we are today in the cycle, through no fault of anyone's own, we've had this incredible boom period where a lot of people in tech were really coddled and paid insane salaries and served lobster and caviar for lunch and didn't have to work very hard. And understandably has created a certain dynamic that you're now seeing people sort of be surprised by, wait, the market can go down, there can be a downturn. And if you're under a certain age, you've just never experienced that. You've been in this incredible boom time like never before seen. And so Netflix talks a lot about the No Rules book, and not that we've implemented all of the policies, but really having a high bar to build a professional sports team, and we're here to win a championship. We have a very high threshold for our teammates and their judgment. This is not if you want to coast and live a comfortable life and have incredible work-life balance and go have massages at lunch. There's nothing wrong with that. That's just not what our group chooses to do. That's great. I worked at Google for 7 years. I loved it.
Is that them?
It's it's them. It's all the big companies. And if you talk about this is a great example to bring this all full circle. Google is one of the most incredible places to work. I loved it so much. Just an unbelievable place. But I found myself after the first few years deeply unhappy, unfulfilled, and then guilty, because how could you be unhappy eating lobster for lunch? You only have to work 4 hours a day. You get to take naps, the best office on the planet. How could you possibly be unhappy here? If you aren't unhappy here, you aren't happy anywhere. And eventually realized those are the superficial things. That's the deception. Those don't make you happy. What gives you energy is building things that excite you, that you want, that help you learn and move forward or help impact other people more directly. And CommonStock, I have none of those things. I don't have lobster or naps. I have no sleep, eat ramen. It's subjectively the opposite, but it's way more fulfilling when somebody DMs me on CommonStock and it's hey, I just became a millionaire because of your platform because I invested in XYZ things that I found here, or this just helped me get a job at a hedge fund. That alone makes me this worth 7 years of caviar for lunch at Google. And I think that's what the world will, not everybody, but people will realize as those go away, that those are the superficial things. Working hard and having meaning is the most valuable part of your job. And so anyways, No Rules Rules book talks a lot about having that high talent density, and working with a group of people that shares that mindset is just unmatched in terms of reward and enjoyment. I want to be ideally the dumbest person in every room and just like intimidated by the people that we hire. And I love it. It's like amazing. We've hired a few people from Wall Street where I'm just like constantly amazed that, and borderline literally intimidated. Like this, I feel so fortunate to have this person on my team because they're so talented in so many ways that I'm not, and I'm learning so much from them. I love it.
Yeah. So if you've taken that same approach internally with the culture, saying explicitly we're like a sports team and cutthroat and.
Yeah. And it's hard. I would say we've taken some of the things from that book, hire great people whose judgment you trust and ideally remove policies. But, being that cutthroat, especially at our size, can be, when everything is so difficult and there's so much unknown, it's tough to actually put that in practice. And so it's a constantly evolving thing that we're working on, I'd say. But definitely the analogy of we are a sports team here to win a championship, and we're here because we want to train to win. There are people that want to climb Everest. That seems insane to me. I have zero interest, but there's a group of people that's their challenge. Our challenge is building this startup, building CommonStock into something that can meaningfully impact millions of people's financial health. That's our Everest. You don't have to want to climb Everest.
Yeah.
There's nothing wrong with not doing that, but that's what we're here to do.
There's also just multiple strategies on how to build a championship team. Like I think of the Patriots and their domination of the NFL is kind of like the Netflix. It's like, we're going to be hard knock, train super hard, be super thorough, work on this all day. And then you have the Warriors in NBA, who I feel like they're out here, just some guys having fun, shooting threes, making it look easy, and they consistently win. So it's kind of whatever's in the DNA of the founding team and the exec team that says, like, are we intuitively kind of hard asses and we want to push people to their limits and challenge them? Or are we like, hey, come here, work super hard, but be creative and have fun along the way? It has to be different. It's like
that's a really good existential question that I'm going to think about all night. Cause I hate the Patriots because I went to school in New England when they were winning nonstop. It was painful, but I have nothing but respect for the Pats. I also love the Warriors, and watching the Jordan documentary, Steve Kerr's The Overlap, The Last Dance, I in no way would ever compare myself to Jordan or Kerr or Steph or anyone on the Pats. But it's a thought that I'm going to take away from this. Which style are we? Which style would I be? Because I watched the Jordan documentary. There's in episode 7 at the end, he talks about just how hard he pushed himself as a leader, but knowing that he would never ask anybody to do anything that he wouldn't do himself or hadn't done himself. And he gets a little emotional. It's the one time he gets emotional, and it's an amazing scene in an amazing docuseries. But that spoke to me in terms of, Jordan was getting in people. He says, I'm going to get in your ass a little bit, but that's because I want you to win. And I want to win too. And we're going to win together. And that's not as much my style. Like, I'm not that hard ass yelling person. I'm probably more of a Steve Kerr, I guess, but I got to think about this.
Totally. I mean, just mirroring, honestly, talking to you for an hour and a half here, definitely, people want to play with Steph. Like, they want to, all things being equal, there's a lot of people who would rather play and have fun along the way. There's definitely kind of an appeal of almost the military mindset of like, we're gonna win by protocol because we just are gonna put in the work and just win by pure force. But it's like they counteract each other. They're both very effective strategies. One not better than the other because it's a creative endeavor. I mean, whether you're building a company or building shooting threes, it's like, it's not hammering rocks, just if you think about the day to day, yeah, you have to code things, but it's highly creative.
It's extremely and there's one thing that I will say that I think is interesting, because you're right. Like, they're both effective. The one I want to caveat is that I don't know for a fact, but I kind of do. Like, Steph and Steve are very creative and fun and easygoing, but I also bet they work like tirelessly. I bet Steph was undersized and just worked his ass off in the background because he was doubted and questioned and was like, screw it. I got this chip on my shoulder. I'm going to prove everybody wrong and have fun doing it. And I think the creativity is something that I constantly try to stress. And it's remarkably hard to get people to stay creative in the workplace. And be like, we need more creativity, off the wall thinking, stand out, because everybody thinks that they join a startup that's growing and they need to be more like a business. Like, we got to pretend to play company. And it's like, no, let me slap that out of you, and metaphorically, of course. And like, think of the craziest, try to make people laugh, try to make people cry, elicit some reaction. If you can do that, we'll be successful. But that's remarkably hard to do on its own. And we'll stand out just for doing that. So not the Reed Hastings, the We Don't Sell Saddles Here article from Mark Benioff, I think the Salesforce, or was it Slack?
I think
it was Slack, actually.
Oh, no, I think you're right. I think it was Slack.
I think it was Slack, about like selling emotion and feeling. That's how you have to be creative to do that. Not like,
that was definitely Slack.
A black Arial font on a white background.
Yeah.
And we're in the finance world where we have a lot of people who are very numbers oriented and financy. And I have to constantly be like, we actually need more memes. We need a little bit more, not the same language, but like Wall Street Bets is a really interesting dynamic because it's the mix of entertainment and finance. And that's like the ultimate.
Well, I think that's if you're going to distill any key qualities that are just like a recipe for success in business as a business, it's like power and beauty. If you think of the largest, like Google, powerful, beautiful, like amazingly powerful engineering. Stripe, like beautiful fucking brand. Everything's beautiful they make, but it's also super powerful. And those two have to balance together. It can't be beautiful and break, but it can't be powerful and ugly. And
I give credit to those teams and those founders because it is uniquely difficult to bring together such different skill sets and combine them into one. And, I love design. I love, when I'm wasting time, I just go open Figma and I just love designing things. I have a Figma to our design team is dismay. And, telling the number crunching finance people from Wall Street, like, hey, we need more animations. Let's make this more fun. And they're like, what the hell are you talking about? They look like I have two heads. So it's hard to marry the two together, but it's unbelievably powerful, as you said, when you do it.
Totally, man. Well, hey, this has been fun, Dave, and congrats on all the progress with CommonStock, and hope you guys keep crushing and having fun along the way. Well, likewise, Mike. Amazing chat. Hopefully valuable. Yeah. Just an absolute blast to chat about pretty much everything under the sun. So thanks for having me. Yeah, likewise. See you, man.